Phillip Streible, Senior Market Analyst of Blue Line Futures. Good morning, Phil, and thank you so much for joining us.
Yeah, thanks for having me.
Phil, what's your take on this deal? How significant it is for the industry?
Well, I mean, it shows you that a lot of consolidation and a lot of M&A activity is going to occur, and they're taking advantage of the current situation with companies that perhaps got themselves in too heavily involved with leveraged debt. And some of these stronger companies like Chevron that had hedges in place that were able to weather a downturn in demand and a downturn in energy prices, they're able to capitalize by, purchasing a company like Noble. So I think it expands their, the assets that they have, the natural gas area that they had picked up, and then also the tax savings in addition to the land in Texas, and then that area really gives them a great position for the long run.
And are we going to see further consolidation in the sector because it looks like it's starting to be a trend so far?
Yeah, I think so, and it's not only in the energy sector, but also in leisure, restaurants. I wouldn't be surprised to see like retailers, cruise ships, all these different areas. They're going to consolidate. They have to. It's anybody who had highly leveraged debt and was unable to handle, that major downdraft. Now, the way the markets look across the board, just energies and all major hard commodities are all starting to go up because of an inflationary period that we're going into now.
Well, let's talk about the energy sector as a whole. We've seen some betterment over there, specifically if we talk about a crude oil price. What's the level? What are the levels that you're imagining in the medium term in terms of crude oil price?
So crude oil looks, really good right here. We broke out to the upside. We've been trapped in this range for the last month, right around that $40, 41, 42. Once we get above there, it seems to back off, but this is all commodities, and like crude oil also are rising because of the decline in the U.S. dollar. So it's creating an inflationary period. So I wouldn't be surprised to see crude oil to go up to $45, even $50 on this type of move. It's just a matter of funds circulating out. Like it looks like right now they're going after silver this morning. Silver's up about 6%. Platinum's another one that's up about 5%. So they're really aggressively going after some of these metals, and I wouldn't be surprised for them to go after, oil and other energies next.
In fact, if we talk about copper, what can we say about the economic outlook, seeing this major surge also today is 1.12% higher?
Yeah, the copper market has been an incredible bull story. Copper and lumber were the two markets that really took off when you saw a couple things happen. You saw the once people got their stimulus checks, they went and they started going directly to like some of these home improvement stores like Lowe's and Home Depot. So those stocks went up. They went after all the lumber, the copper, to expand projects in their houses, and you saw a lot of building expansion. And that was now the building materials aspect of retail sales. They're already over pre-pandemic levels, and it caused this short squeeze on lumber and copper. And then the mines themselves and the sawmills, they have to practice social distancing. So their utilization and what they're creating is significantly lower, and it's causing this physical supply squeeze.
And what about gold? We also see the gold hanging in there above $1,800 an ounce, certainly a very important level. How far can we go with this rally of the gold, which is actually together with the indices rally?
Yeah, I think gold's going to go up to 2,000. It's just an inflation play. You really don't have much growth out there. So growth is declining. And what they're doing is the dollar index is selling off because the Fed is continuing to print money and pass all these budgets and everything else. And then you're seeing gold and silver and everything else just going, through the roof right now. I think gold, I think that 2,000, once we start getting close to that number, I think Wall Street is going to just keep talking about 2,000, and it'll be a natural occurring event like how, Nasdaq 10,000 and all these psychological levels will play out.
And in your opinion, what is a good entry level, or let's say, what's the level of the gold price that we should see in order to start buying?
I mean, it's been so difficult to buy. The rallies, the corrections have been shallower, and the extensions have been higher, and it's been not paying attention to resistance levels. It keeps breaking out to the upside, and the support levels are rising, but they're getting shallower. Ideally, I'd like to be long in the 1700s. But now this is tough. I mean, I don't know, maybe 1825. I really don't have a specific level for someone to get in at the moment. We're looking at different creative strategies like selling put options, where if the market corrects down there, we'll end up being long. If we miss it, we keep the premium. So this is where you got to put your trading hat on and really think on creative strategies to get involved.
And do you think we should have the silver in our portfolio?
Oh, silver, definitely you should have it. We believed, for a long time that silver was going to be the best performing metal because it has the industrial demand, which that's where the government focuses mainly on, is creating industrial jobs, because every industrial job that's created creates 7 additional jobs. So we believe the industrial demand and then the precious metals demand of it, because of the gold-silver ratio, is so out of line. We really think that silver is going to be the best performing commodity.
Let me ask you something. I just want to get back to the crude oil price for a second. How important is the vaccine for the crude oil price, and what kind of levels can we imagine over there if you're going to hear an approval of a new coronavirus vaccine, whether it could be from Moderna or the Oxford AstraZeneca alliance?
It's real simple. I mean, you get a vaccine for crude oil, all of a sudden things open back up. You got cruise lines going. Everyone's on, back on airplanes again. I mean, my brother just flew a flight from Chicago to Miami. There's only 50 people on it, and the plane will hold 300. So, you'll have all that demand, that resurgence, the travel demand and everything else. You'll have cross-border travel again, and next thing you know, crude oil is going to be $50. So, I really think that OPEC did a great job rebalancing the supply that was out there. We already saw China go after crude oil pretty aggressively. So I think if they draw down some of their inventories, you'll see crude oil. That's how it can really move up. I like crude oil to the upside. You definitely need that vaccine, though, in order for it to get to those higher levels.
Phil, very final question. We do see a continuous rally of the technological sector, Nasdaq hitting new all-time record highs so far at 11,000. We do see a little bit of easing of the rally in pre-market, 0.45% higher. How far can we go with the tech sector and, of course, the Nasdaq rally, in your opinion?
I got to think that some of those stocks might be slightly misaligned on their valuation. So we do anticipate some kind of correction to happen in the Nasdaq. Some of the key stocks are really good. I think, though, that like Tesla and things like that, those stocks might be in their small little bubbles in their own little world. So we are anticipating some corrections there. But, I think don't chase this market at all.
All right. Thank you very much. Phillip Streible, Senior Market Analyst, Blue Line Futures. Thank you for joining us, and, of course, have a great day over there.
Yeah, you take care.